Hello and welcome to the week ahead with me, Chris Pollock, joining me on a rare sunny autumn Friday. So forgive the phrase a little bit sun-kissed this camera. Let's go through what's looking likely to drive things in the week ahead. But firstly, it makes sense to look back on the week just gone and see what we can learn from there. We mentioned last week the CPIs really were going to be the big story. That the data wasn't particularly heavy, certainly in the first part of the week last week. So CPI day was always going to be an interesting one. And we had beats across the board, the month on month on the core, the month on month on the headline, and monthly and on the yearly were all beats. So the inflation problem, I mean, it is as bad as these numbers are relative to expectations. We are still seeing inflation decline year on year. So this is by far a kind of a cry of panic for the inflation story. But the Fed often have a real fear. The last time we had inflation nudging kind of above 8%, last time it pushed there, we felt like the victory dance was being done on this little pullback that we had before my time, albeit back in the late 70s, before they realized the job was far from done. And the markets rallied up to near 15% on there, or the CPI rate hit near 15% on a kind of second high. So the Fed are very conscious of trying to avoid this. So they will be mindful if we do get similar action from CPI. But as much as these were beating expectations, they were still posting declines. What was also kind of more interesting, and maybe something you might not have followed quite so closely, was the unemployment claims were pretty horrible, to be honest. Seeing 258,000 more jobless claims this week started relative to the expectations of 231. You don't normally see beats and misses by quite this much. We're normally in the ballpark of within 10 or so. So to see something quite so dramatic, and we also haven't seen many horrible numbers really on this over the last few months. So maybe a bit more interest in the jobs number than the CPI. But to be honest, neither of the numbers were really what interested me. What interested me most about Thursday was the reaction. So you'd expect high inflation and bad jobs number to be really quite troubling for the stock market. And at 130, well, it sure looked that way, right, from where we were in the moments before the number at 37s. We got down to lows shortly afterwards, 15. So, yeah, took 20 odd points away. But this action looked very much like trying to push a beach ball down underwater. We'd try and get the moves lower. There were some large option levels that looked like to me they should have been traded, and the market didn't fancy it. We had another go, went into some key levels off this order flows up here. Again, we pushed down, just tagged the lows. These swing lows often get taken before being reversed. Again, we just turn around and rally into the close. You would have think, if a market has all the opportunity to go down, and believe me, the perfect storm for this to go down was there. High inflation, terrible jobs numbers. The numbers were there to get this down. Yet, when that doesn't happen, it can't go down on bad news, then it can probably go up on no news, right? Although maybe there are some news events we can talk about as well a little bit today. We're not into earnings, but that's something we'll maybe talk about into a bit more. So, where are we on these markets on the big picture? So we've seen this kind of rally to what is new all-time highs on the S&P as of this Friday so far. Again, the Dow's popped new all-time highs. The Nasdaq still a little bit away, but yeah, pretty strong action. Gold kind of been a little bit more lively. Fridays are often good for gold. People often like to buy gold ahead of a weekend in case something untoward happens in geopolitics, and there's a little bit of a hedge against that relative to the rest of their stock portfolios. So yeah, we're seeing a bit of a bid come through into gold today as well. But these stock markets are really what interests me, and most interesting is that the Nasdaq has not conquered its high from the summer yet. I say yet because we're only 25 days away from the election, and we still feel like we're bedded into a rally here. To me, this feels like it wants higher, right? This tiny down day yesterday on, to be honest, what was a bit of a horror sandwich of data, and it could only move down a smidge. This to me suggests that we're in for a bit of a rally. Look into next week, we've got option expiry as well, which often exacerbates that sort of move. But before we get to next week, we have rarely something to look forward to on the weekend. China's debt to GDP ratios are horrendous. You've probably seen this in the news a little bit. Stocks trading sideways, apparently, but they're signaling they're going to announce a fiscal stimulus at a press conference on, disappointingly, Saturday, when the markets are not open to react to it. We're expecting a stimulus package of circa $283 billion. And we're going to know about this with plenty of time before the markets open late Sunday evening to then be able to react to it and see how the markets move. If this stimulus package is well received by the market, this could actually kind of dominate the whole week. Again, if it disappoints somewhat, then it can maybe dominate things the other way. But I think this is something, before we even get to Monday morning, which you might want to be aware of, which could really point you in the direction of the sort of trades you want to be looking at. Obviously, higher stimulus tends to be good for asset prices, right? This money being thrown into the market, the more there is, the more is going to flow out and into assets, the higher these prices are going to go. So do be aware of high stimulus being pretty good for most growth assets. Something you might want to follow to see how the reaction of this works is Bitcoin. Bitcoin is something that trades 24/7, not the CME Bitcoin futures, but spot Bitcoin. You'll be able to see the price of that react on Saturday. If they like this news, then you might get a bit of a heads up on how the market's going to respond to this next week. But let's look at the week ahead. From Monday at least. Give yourself a rest if you can over the weekend. I'm going to enjoy one, having been away the last 2 weekends. So it's time to relax and get myself ready for what should be a nice, slightly different week. A week without too much American news for once. We've had a lot of big US data on the number side, but we're starting with the US on a bank holiday here. Right, this is Columbus Day in the States. It's not a full bank holiday. The stock markets are expected to be open or are open for a normal regular trading hours. So it's probably just going to mean lower volumes. But I wouldn't go gung ho necessarily on this Monday, most Mondays, to be honest. We've got bank holiday in the US, a Thanksgiving holiday in Canada, and I like this one in Japan. Health Sports Day. I feel like you people in this office could do with one of those. The rest of the week looks a bit more Europe focused, a bit more inflation focused. So let's start at the beginning. The UK's equivalent to the non-farm payroll figures. So the differences are, well, average hourly earnings is a similarity, unemployment rate identical as well. And instead of a non-farm payroll counting the number of jobs, we have a claimant count, the number of people claiming unemployment benefits. But this is a monthly figure, very important. This probably get the week going in the UK, the pound, FTSE gilts pretty early on Tuesday. ZEWs always warn people about these zoo numbers, often leaked. I say leaked. I think you can pay for this number and get it early. So I wouldn't be looking to trade these figures necessarily on Germany next week. Canadian CPIs we like in here. Canadian dollar is a lovely pair to trade often. It's not a heavily traded one. And then you get more CPIs out of New Zealand. And then following that, early in the UK on Wednesday. So within less than 24 hours, you're getting CPIs from Canada, New Zealand, and the UK rocking through Tuesday and into Wednesday. We've got a 30-year German bond auction, but I've had a look. There's really not that much on the bond auctions this week. Wouldn't be worrying too much about it. In fact, the data really isn't that heavy until you get to Thursday. Unemployment numbers could be interesting for those Antipodean colleagues of ours, but big one's probably going to be the ECB rate decision. We're expecting rate cuts now. This is possibly more in the balance than people were expecting. I know that some of the doves were out last week suggesting they might really push for a heavier cut, given those PMIs that we were discussing not last week, the week before. So I think this is something to really pin yourself to. Again, Thursdays are often a great day in the market. This may lead to it. We've got the press conference that might be quite difficult to listen to. I struggle with Christine Lagarde a little bit compared to some other central bankers. The market doesn't really respond to her as well as you would like, with some real clarity. I'm not sure if they don't care or they don't believe what she's saying. Nevertheless, you need to pay attention in case she does drop something worth listening to. And within that, there's a little sandwich of retail sales and unemployment claims. So all within 45 or 40, 30 minutes, should I say. We're getting a lot of numbers through on Thursday ahead of the Open. Oil inventories as ever, 3:30-ish. 4 o'clock we got on Thursday. And yeah, Friday a little quiet. But the big thing for me next week is none of this. The big thing for me next week is earnings season. We have earnings season off and running today. JP Morgan's earnings were out earlier. We had a spike at, well, they were actually due out at 11:55, but they actually came out a little bit earlier than that. To be wary that sometimes United Health Group, Goldman come out a little bit earlier than expected. But safe to say, it was well received at the time and well received on the Open. And the reason why we put these spreadsheets together for all of our traders is that it really helps us not to trade the stock, but to trade the indices. And if you look at the Dow Jones today, you wouldn't be doing too badly if you bought that at 11:45 when that news came through, right? Here's the move. Here's 11:45. And we are up, even if you were kind of getting along after 5 minutes of this. The worst you would have ever been off was 14 ticks. And you'd currently be up 330 of them. Plenty of action in these earnings seasons. So much. These are my favorite times of the quarters to trade. Who gets it all done in 1 month, and then it all goes away until mid-January, and we do it all again. But these big ones are all out on Tuesday next week. So the 15th, we have the biggest component of the Dow Jones, United Health Group, second biggest component of the Dow Jones, Goldman Sachs, and a not too shabby Johnson & Johnson in between, all out on Tuesday of next week. Travelers out on Thursday, along with LVMH, the second biggest component of the Euro stocks. We're still getting some FTSE ones through, some more Dows through on Friday with American Express and Procter & Gamble, sadly out very close to one another, so you might have to treat that as one trade. But this earnings season is getting into real full swing. The Dow components start really early on this, and they are the best to trade. And if you want to get a copy of this spreadsheet, which kind of tells you the dates and times when all this is coming through, please feel free to reach out to me directly. You can do so on my Twitter handle at C for Chris volume profile. Also see the volume profile, right? People need to see this stuff a little bit more than they do. So that's a different question. So this earnings story is going to be one that is around for the next 3 or 4 weeks. I will be referring to this on the review, I'm sure, this time a week from now. But between now and then, there's a lot of CPIs, a lot of European stuff, not too much in the US. And I should probably round the week off by saying it is option expiry on Friday of next week. So these options expiries in October are never quite, well, say never, they aren't as high volume. That's would be a fact compared to the quarterly options, the one that we mentioned back in September. But the 18th of October, so a week today, this is going to undoubtedly be a market driver. And what tends to happen is you can often get trend continuation into it and often trend reversal after it. And given where we are in the big picture of stock markets at the minute, trend continuation is uptrend, right? We're seeing that very clearly on the Dow, very clearly on the S&P, and the trend maybe slightly less clear, but still trying our hardest on the NASDAQ. I feel like there's a really good opportunity for these markets to keep pushing and pushing and pushing. 25 days before an election, that there may be that rally that maybe gets into the end of this month. Might be some profits taken in the week or so leading up to the election. It's very much in the balance over there in the US. A couple of points in it in Kamala's favor, last I heard. But yeah, that can go in a day, in a moment, right? In one comment. So very close knit thing. Therefore, maybe some profits will be taken at some point. But I feel we might push and push and push. And I wouldn't be surprised if we were pushed to push so hard that the NASDAQ was to do the 800 points it needs to get itself to its all-time highs ahead of the election. So yeah, something that we can refer back to in a week's time, or maybe a week after that, and we'll see how I'm getting on with that call. But certainly in a week leading into option expiry, if you look back to where we were in the September one, we had a pretty good. If you look at the S&P here, we want to trade. We had that clear trend leading into the week of option expiry. Then we had one up day, two up days, one down day, very big up day on the Thursday. This kind of trend continuation is something you often see. We didn't get the reversal after this, but I think the trend continuation is really your friend with this, and therefore be long or than short next week for sure. Never short all-time highs. Right, that's probably a good place to call it. Have a lovely weekend. If you want to reach out and get that earnings calendar, or want to do some one-to-ones about how to trade this stuff, right? Please reach out to me on Twitter, the volume profile. All right, have a lovely weekend, and we'll see you next week.